Hey stream viewers, if you're outside of the United States, I have a cool offer I want to tell you guys about thanks to our partnered broker, 8cap. 8cap is currently offering the ability for new depositors to get access to our premium tool, the EdgeFinder, completely for free. Now, how this works is basically you create an account and deposit a certain amount of money into that account, and they will essentially buy the EdgeFinder on your behalf. So it's a win-win-win. They get a new client for a reputable brokerage, you get access to the EdgeFinder and a great brokerage to trade with, and you'll be supporting the show by signing up with 8cap. Now, here are the steps if you want to find out more about this specific offer, but make sure to follow them specifically as we list them out on the screen here. Step 1, navigate to a1trading.com/8cap. That's a1trading.com/8cap. Step 2 is to follow the instructions and to make sure you use the specific link on that screen to sign up for your new 8cap account. Step 3, complete the required deposit amounts and contact their team as instructed on the page. So if you're interested in finding out more about this offer, head over to a1trading.com/8cap, and we'll also be dropping the link to this down below in the live stream chat as we speak. Like I said, make sure to follow those instructions specifically if you'd like to get access to a free copy of the EdgeFinder if you meet the deposit requirements as listed on the website. Full information, like I said, can be found a1trading.com/8cap. Now back to the stream. Good morning, everybody. Welcome back to another live stream. Hope you're all doing well, and hope you guys had a nice weekend. We are back on the charts, taking a look at things, and I just realized I got to change my stream overlay here because it says daily analysis from Alan, and I'm not Alan. So let me switch that really quick. Boom, there we go. Swap that out for the nice little, it looks pretty cool. Our stream layouts look pretty incredible. The team has done a great job putting that all together. Anyways, hope you guys, like I said, had a good weekend. We are going to be taking a look at some setups, some markets, etc. here as we get started today. Of course, it is President's Day in the US, so I think the stock market is closed today, but the futures, I believe, are still open, and currencies, of course, still open, cryptos still open. So we'll see what is going on as we get started here today. So in terms of the stock market, not a whole lot of activity here on the future side of things. NAS, etc., S&P 500, pretty much flat here to start out the day. Dollar index, just slightly firm, not really too significant. However, gold here a little bit lower into the session. And, you know, I talked about this on my Sunday video. I do like the upside potential for gold. I'm watching specifically this resistance level that we've been keeping an eye on the last, I guess, 2 weeks now, since you had the big fallout. Big resistance got tested here, came right back up to this area. Again, saw a little bit of selling pressure, but arguably you have potentially a higher low forming here. The question becomes, on a technical basis, can we get above that 5,100 level on gold spot price? That's the question. That's what I'm going to watch for here as we get into this week's trading. Gold is on the watch list for me. I have a couple things to talk about here today. I did have an NZD JPY trade that did unfortunately stop out, or actually, I don't think it did. I have to check my account in just a second. Looks like we may have barely survived this gap down and now back into break-even territory. I'll have to check that. Of course, inside of the group, I'll update you if I did get stopped out or not. At least from the trading view window that I have, I think we survived it. Anyways, NASDAQ here, pretty flat. Dow Jones, slightly firm here today. Russell, flat. The Nikkei was down here, down 1%. Take a look at silver also. I do have to also continue to reiterate the outperformance from gold here recently. And actually, if we took a look at the gold-silver ratio, you can kind of see what I'm going at here with gold starting to show some signs of relative strength. So for a couple weeks now, silver has actually been the outperformer, causing the gold to silver ratio to continue trending down. So what we've seen here recently is a bit of a flip into more of a drift towards gold. So gold outperforming silver. We'll see if that does have some longer term implications here. If we take a look at a weekly time frame or even a monthly time frame, you can see that we seem to have found a very sharp bottom on this ratio. Perhaps that signals that we could have some outperformance in gold for a little while, which we haven't had in a while. Silver has been such a monster in the last 1 year or so. Love your videos, man. Keep up the good work. Thank you so much. Appreciate you on that. Morning, Nick. Today is a U.S. bank holiday, so I don't think we have much movement. Yeah, it's probably not going to be a big moving day. However, a good time, I think, to still kind of take inventory, take notes on things, and discuss a little bit as to what we may be seeing coming down the pipeline. I also still have this oil trade on. I feel pretty decently about this trade for now, although I believe if we take a look at asset scorecard here for oil, I think it's gone back into neutral territory. Yeah, it's at +0. So you can see I got long oil when we did get some strong readings on EdgeFinder for oil. Technicals have flipped a little bit more soft here on the 4-hour and daily chart trend, while seasonality still looks good for the month of February. We have economic growth bias that looks bullish. And I do want to take a second to explain this, why I still think oil may actually be a decent spot. Nick, what's your nickname? What do you mean, what's my nickname? Trader Nick. You kidding me? People in my real life call me Trader Nick, which is honestly kind of cringe, but like whatever. It's funny. I made that name in college. When I first started my YouTube channel, I had no idea that anybody would watch it. I just wanted to log my thoughts as a trader. And I was literally like, I'm a trader and I'm Nick. And so I'm Trader Nick. Anyways, yeah. Hey, James. Yeah, great weekend. My wife and I, we went out to eat. We had my brother and sister-in-law over, we got a good workout in. It was a great weekend and feeling refreshed. So anyways, I still like oil. I like energy here because I think that the technicals are kind of holding us back a little bit. We'll see if price can get a little bit of momentum here to the upside. But economic growth looks pretty solid. You have solid GDP. This is a huge one for oil, right? Solid GDP growth out of the US. Manufacturing PMIs also strong. Services PMIs also strong. These are good indications of economic strength out of the US. Last week was also a smash hit for the economic data side because we had CPI come in soft, right? That's good. That means interest rates may come down lower. We saw the 2-year yield, which you can see reflected here, confirmed CPI. And by the way, I love these two things confirming one another. Let me explain. CPI came in soft on Friday, and in tandem, we saw the 2-year yield come down. Very nice synergy. That tells you not only did inflation come in soft, but the bond market sort of confirmed that's going to probably lessen the probabilities, increase the probabilities of rate cuts. Rate cuts are optimistic oil. So why then is oil getting a neutral reading? Well, fundamentals are also kind of mixed because we have some weakness in the jobs market still, which could slow growth if it persists. Although we did get some solid numbers, we still have some not so great numbers as well in the jobs market, right? NFP was solid last week. Unemployment rate was solid last week. But we still have weekly jobless claims weak, weaker than expected. ADP was weak, and JOLTS job openings weak. So in its entirety, oil is getting a neutral reading. We also saw institutions do some selling in the latest week over week change. So I do still like the oil long, but I will stop out and have to reevaluate if we cannot hold this area of support. I'd love to see today price respect this area, get some momentum forming off of this zone of support. We have so far a nice wick off the bottom. Let's see if we can follow through. And if we can start breaking back above 66, then I think you have a very solid breakout that could follow through. That's my thought. Nick, can you check US interest rate probability and how will it affect gold? Yeah, so if we take a look, you can always just pull up the Fed Watch tool. It's a simple way to look at that. Probabilities for March 18th, we are unlikely to see a interest rate cut. But then things start to actually get interesting. You have a 25% chance of a cut, at least according to the bond market in April. And in June, you have slight leaning probabilities that we are going to see a rate cut. Once you have Kevin Warsh in the Fed chair, it is expected that he will be a little bit more willing to cut interest rates. And how does that all impact gold? Well, I like gold to the upside, but still a bit mixed. So let me explain. Technicals, I like, right? I think technicals look good. I'm looking for breakouts. But interest rates are sort of, and interest rate future probabilities are kind of derived from this stuff: inflation, jobs, economic growth, right? If you're only looking at the interest rate part, you're kind of missing the inputs to interest rates, which are these things, right? So if we're looking at gold, if we're trying to determine, does gold have potential strength? Well, what could get us there would be maybe more bullishness for the fundamental score of gold. What would that look like? Weaker jobs data, cooling inflation, weak economic growth. That's the sweet spot for gold. Right now, we kind of have a mixed bag. Economic growth has been recently pretty strong out of the US, with specifically GDP and PMIs all beating expectations very strongly. That's going to give us more of a bearish read. And so you can see we have a lot of neutrality on EdgeFinder right now. Usually you don't. Usually you have a lot more strong readings on things. And you do have some currency pairs that are getting more of an extreme reading. But if we just take out the neutral readings, you can see we're kind of light outside of, actually we have no non-currency pair. We have no commodities or indices that are getting strong readings right now. I'm waiting for Nick saying gold will go higher because it means gold will go down. You could just wait for my opinion and fade my opinion. And this is going to sound so arrogant of me, but if you actually took the opposite trades that I have over the last few years, your account would probably blow up. That sounds so, I mean, but it's true. Like, I could show you the statistics on my account if you were to fade everything that I did. Now, granted, I'm definitely not always right. Like, I have plenty of periods where I'm dead wrong on ideas. But if we were to just take a look, I'm going to show you. Boom, boom, there it is. Okay. There we go. So if you were to fade every single trade, your equity chart would look the opposite. Again, what I also want to reiterate, though, is that doesn't mean that I'm right all the time, right? There's a lot of times where I'm just completely wrong. But the cool thing about trading is that you can have that kind of equity curve without being right all the time. In fact, like, I think my win rate is somewhere between 40 and 45%. It's not super high. But when I'm right, I try and make it count. When I'm wrong, I try and get out of the way quickly. Like, I think I might, like NZD-JPY, here's an example of a trade idea. Like, if this one stops out and it's just a bad idea, then I just move on to the next one. If US oil stops out, I'm just moving on to the next one. I also had several options trades that went terribly wrong. So for example, here's PayPal. I was essentially, without getting into the options mechanics, if you're not an option trader, I was bullish on PayPal, completely tanked, which was no fun. I'm also sitting in Hood options, which, since the stock market is closed, we won't be able to see an updated price, but I was bullish on this one too early. And so the thing is, you can be right. You can be wrong pretty frequently and still make money in markets. It depends how you handle your wins versus your losses. So I do like gold to the upside, but I'm waiting for a few things. I'd like to see a technical breakout. I'd like to see maybe a little bit more macro readings go in favor of gold. And then I'd potentially be looking at that. Let's take a quick look, by the way, at COT this week. See if there was anything interesting. Canadian dollar got bought, the Australian dollar. And by the way, if you don't know what I'm looking at, this is a great way to track institutional activity. We can see the latest commitment of traders report. Specifically, we're looking at non-commercials. That's going to be your hedge funds, banks, etc. So let's take a look. Canadian dollar, they were bullish. Aussie dollar, SP500, Euro, South African Rand, Russell, JPY, Dow Jones, Platinum. These are some things that institutions did some accumulation on in the latest filing. Let's flip it around and see maybe some things that they did some selling of or distribution of. The Nikkei, the 10-year treasuries, British pound, silver, gold, US oil. And so this actually factored kind of negatively into gold and silver's score within EdgeFinder. I'll show you how it did that. So if I go to my asset scorecard, I think it's still got gold. Yeah. What you can see here is that notice how, and for those of you guys who have EdgeFinder, I want to show you this because it's important that you understand like how it's thinking through this. The COT score, right? You have two sections here. For gold, you can see that the latest buys and sells, that's going to look at this column here, the change, right? So week over week, we saw a bearish flow on gold. So institutions sold on a net basis on gold. That's going to give us a bearish read, which is going to negatively impact score. Now you'll notice that the overall position, 80% of positioning is long. That's bullish. So you have a mixed reading. So what should the score be overall? Look right here. COT and sentiment are getting a +0 reading. Does that make sense? That this page is intended to be a way for users who are browsing the EdgeFinder. If you pull up the asset scorecard, our goal with this indicator, this page, is for you to be able to look at a wide range of stuff and understand why the EdgeFinder is scanning and scoring things a particular way. So that's the thought. NASDAQ is completely flat here. A little bit of selling pressure, at least on the futures overnight here. Take a look at gold. Gold down 1% today. Very interesting. We'll keep an eye on that. By the way, last week we did a free week on the EdgeFinder for people to be able to try out the software. I hope that you took advantage of that. That is unfortunately closed today, so we will no longer be, that will be shutting down in the next like 30 minutes. If you are interested in getting access to the EdgeFinder, this week we're going to offer what we talked about last week, which is we're going to be doing 40% off the EdgeFinder this week to everyone who tried it out and liked it, decided they wanted to purchase a copy. We've already had some people taking advantage of this. We're going to be doing 40% off the EdgeFinder this week. Again, I hope you got a chance to try out the tool and see if it's right for you. For people who did, if you're ready to purchase the product, if you're interested in that, we are offering 40% off for a limited time. Here is the place to take advantage of that. If you're interested in getting 40% off on EdgeFinder, again, that is only available for a limited time. Send a message to our support staff. We've got the link here in the live stream chat. How long is the EdgeFinder 40% off? We're doing it just this week. Again, we did 1 week where we did EdgeFinder free to everyone. And now this week we're doing EdgeFinder 40% off for a limited time. So for people who enjoyed checking it out and were like, hey, you know what? EdgeFinder is game changer. We had a lot of amazing feedback. By the way, even if you don't purchase the EdgeFinder, thank you to the people who shared feedback with us. I got a flood of messages on my YouTube channel. We got our support team got tons of emails on things that they liked, things that they were hoping to be implemented. It was really good research for our team to let people to try it out. And now, again, we're offering that extra special discount. How much is EdgeFinder? Usually it is $1,400 one time. You don't pay monthly. It's a one-time payment. Currently, it is 45% off. It's 40% off, but if you message in, you get 45. So again, we value the input of the community. We have built the tool. The tool is only as good as it is because we have taken so much feedback from listeners, viewers, etc. But yeah. In Indian currency, yeah, if you are in a place where the EdgeFinder is extra expensive due to the US dollar, send us a message. Let us know your circumstance. We can set up a payment plan for you. We are understanding that different currencies are more or less expensive to buy our products. We are obviously an American-based business. So if you need help with that, if you need to set up a payment plan, we are offering that. Just send us in a message. That's why we do that, right? We give people a chance to communicate with our support staff here on site to answer questions, to set up plans if you need it, and make it accessible to you. We want more people using our software, and transparently, that is of course why we did the free week. We made it a free to access tool, and now people can, if they liked it, choose to purchase it if they want. Let's see. Let's see what we've got moving here today. Dollar index, a little flat. Oil's got a little bit of motion going here. We'll see what happens. I mean, there's a little bit of a wild card in the oil trade always because of geopolitical stuff. If something happens with, the Iran situation, oil could skyrocket higher. I continue to be, I'll tell you guys, I'm continuing to be pretty cash heavy in terms of my portfolio allocation. What I mean by that is I don't trade on a CFD brokerage personally. I'm in the US. We can't trade CFDs. I don't trade prop firms. I trade a US stock brokerage where I can trade all the things that I like, which are stocks, ETFs, options, all in one brokerage. You could also do futures if you're a futures trader in the US. But for me, I really like trading options. I really like trading stocks and ETFs. So I can track all these things. I can trade US oil, for example, which I'm not logged into my account, but that's what I'm long currently. When I say I'm long oil, I'm trading USO to the long side. Same thing as oil, just the ETF variation. So I think oil has upside. I really like the technicals here. Like if we take a close look at oil from a technical perspective, what do I like here? Well, I'll show you. There's a couple layers to this that I really like on energy. Both fundamentally and technically, I really like oil. There's a little bit of a soft component that I like about oil. So let me explain. This whole AI uncertainty trade, I think actually favors some of the hard assets. And I'm not the original person to say or think that. But all this concern about software, all this concern about, anything digital, databases and softwares and UIs and all that stuff under threat in the stock market. Where has been a safe haven? Well, it's been companies that have physical, real world assets like energy, right? People have like funneled money out of technology stocks. Here's XLK. This is the technology ETF. Pretty tired, sleepy looking chart. But then look at consumer staples. These are businesses that offer straightforward things like Walmart, Costco. Take a look at even real estate, right? May have gotten a little bit of a bid simply because, oh, by the way, real estate's breaking out of this multi-month channel here. This is pretty cool. Real estate breaking out. I think that you're getting a little bit of a bid into new places simply because people are like selling technology and then they don't want to sit in cash. They want to put it somewhere else. So I think there's a little bit of that going on. And I think that, oil may see a little bit of a bid in tandem with that. Like commodities in general, I think could have an upcycle. You have inflation that's not completely eroded away. I mean, 2.4% CPI is a really good number. And I think we had the lowest core CPI that we've had in many months, which is really good news. So that could lead to interest rate cuts, economic. We are in a really weird time where all this AI stuff is creating an incredible boom in corporate earnings efficiency. It feels weird to hear that because people are like, the economy doesn't feel good to me because the average consumer doesn't necessarily feel the best they ever have. However, business earnings and efficiency of US tech companies is unbelievable. Like it's a boom, like a mega boom in terms of this AI efficiency. Companies are implementing AI anyways. Back to the oil idea. From a technical perspective, we've got a nice momentum break here to the upside. We've got our moving averages going from solidly downward trending to actually starting to trend upwards, right? Your 20-period moving average just crossed above the 200-day. You've got another cross going on over here at the same time. Yes, Sluggy's got it. K-shaped economy. It's weird, man. Like it is really, really weird. I've never seen, at least in my time in markets, such an obvious K-shaped economy. You have major wealth gaps. You have all sorts of stuff like that. And of course, people don't love that, but like just the harsh reality of it is that AI efficiency is causing a mega boom that is not necessarily felt by everybody. Hey, Nick, is it true that when speaking about mortgage rates, we should look at the bond market instead of the rate that the feds are deciding on? 100%. The Federal Reserve does not control mortgage rates. Mortgage rates are a marketplace. It's a straight up, if you want to go get a mortgage on a house, the thing you should be looking at is not what the Fed is necessarily doing. It's instead the 10-year yield. Okay. Because the mortgage world is a marketplace set by what people are willing to pay. So right now, in actually a good turn of events, we had a nice little slide lower on cool inflation. This is why I said earlier, this past week was really good. You had good jobs data and cooling inflation. That's pretty excellent in terms of Goldilocks type of scenario. You want cooling inflation and yields to come down while also having productivity high and jobs growth high, right? Drink water, be healthy, please. Thank you. I appreciate your concern. I got my water right here. Thank you for the reminder. So I didn't try it. I want to get it. Does 40% apply? Hey, Gregory, yeah, send us a message. We'll drop that link one more time. Like I said earlier, we're doing 40% off on the EdgeFinder right now. If you would like some details, if you'd like some help, if you'd like to set up a payment plan, if you need the promo code, etc., the best way to get access is to simply send us a direct message on our website. We'll drop the link here in the live stream chat to where you can speak directly to a member of our support team about setting that up if you have any questions. So yes, yields are moving lower, but this is not set by the Fed, right? The 10-year yield is not set by the Fed. If you want to look at what the Fed's impact is, it's a little easier to see it on like the 2-year yield, which is short end. But the long-term end, 30-year mortgage rates, 10-year yield, these things take time, or they're set by the market. By the way, here's that link. So if you want access to speak with our team here. Okay, here it is. Boom. If you want details about the discount that we're running right now, send us a direct message, speak to our support staff. They can set you up with that 45% off discount just through this end of the week. EdgeFinder will change your trading life, get you one. Thanks, Tiger. Appreciate that, man. Yeah, so yields are huge to watch, especially if you're somebody who is interested in buying a house. I have many friends who are watching the 10-year yield because they want to buy homes, but the rate at which you have to borrow, historically speaking, is not high. Like, here's a monthly chart of the 10-year yield. It's not high. It feels high because we've lived in an environment where interest rates have been really low ever since the great financial crisis. Yields have been very low. Now, it also feels exceptionally high because wages have not kept up with, the cost of living. So that this is a little bit gaslighty, right? Because the cost of living has gone up. And so borrowing money is even more difficult, or interest rates are even more difficult when people have less expendable income. So it's an interesting time for sure. But yes, on a long-term absolute basis, are interest rates high? No, they're pretty normal. It's just that they feel high because people are not used to these levels, and the cost of living is also very high. Nick, I'm also long on oil when there was a EdgeFinder rating of bullish. Yeah, I mean, we'll see. It might come back in. But yes, we had that oil reading for just like, a couple days? 1, 2, 3, 4, 5 days of bullish reading on EdgeFinder score for oil. But this is what I talk about this sometimes. Sometimes you get like a +5 reading and it dissipates pretty quick. But I really liked the oil setup, and I still do. But if this proves me wrong, if price tells me I'm wrong, I'm out of there. Like, going back to our technical breakdown on oil, I have this long position. I took it when EdgeFinder had a bullish reading. We pulled back into support. Looking left, my risk management on the trade is a break of this structure and also a break of some of those moving averages that we just got done discussing, right? So I have the 200-day moving average as a dynamic level of support below here. So if this falls apart here and we can't hold support in these areas, then I will cut the trade and take a loss, a small controlled loss. And if I'm right, my plan is with oil to see if I can catch some kind of higher low in order to take my existing stop loss and trailing it higher. That's at least the plan. Once I get the software, do you teach how to read it and use it? Yes. So if you purchase EdgeFinder, actually, you can get the course on how to use EdgeFinder completely free. Let me show you. Anyone who's thinking about it, if you're like, I don't know if it's right for me, I respect your skepticism. Our team and I, we've been working on this for, I guess we've worked on the software since 2021. So we've been doing it for 5 years. If you want to explore our free course, head over to our website, a1trading.com. Under EdgeFinder, click tutorials and check this out. We have many, many videos. We have many guides on what the tool does. It's not a magic box. It is a market screening tool for professional traders or for aspiring fundamental traders. If you are looking for an all-in-one workshop to scan markets, and maybe more importantly, summary tools, right? Most people are like, okay, I recognize this stuff is important stuff, but it's simply too much for me to look at all at once. Take a second today or a few minutes today, head over to a1trading.com. That's A1, the number one, a1trading.com. Under EdgeFinder or Stockbox, if you're looking at that, we'll do also Stockbox 40% off this week as well. Go to tutorials and you can read all about how our tools function, what they accomplish, how they assist traders in finding more insightful trade ideas based on macro fundamentals, market sentiment, crowd sentiment, institutional activity, and simple technicals as well. We have thousands of people using our tools all over the world. I'm incredibly proud to be able to say that. It's so cool to me to have, built this. Our team has relied heavily on the community to build this tool. We've constantly surveyed people, asked for feedback, made tweaks and improvements. This whole thing has been essentially built based on people's feedback on what is confusing to them about fundamentals, what they're looking for. It's also built by myself in regards to what I, as a fundamental macro trader, the high level understanding overview that I'm looking for is automated in this stuff. I could do all this by hand, but it would take me countless hours. I used to do that. It was a lot of tedious process to, do this manually in a spreadsheet. I used to do that. And so automating the full rotation of how all this economic data is coming in, pulling that data, curating it, interpreting it, using an algorithm to score all of it. And then you as the trader, you can just simply get a reading on things that you care about. US dollar, we track currency pairs, commodities, indices, etc. So again, if you've thought about it, head over to our website, a1trading.com, explore the tutorials section, go through the free course, and learn how this might be right for you. And if it's not, totally understandable. But if it is, take advantage, because right now we're doing 40% off. All the information is available on our website. Like I said, a1trading.com. Up next, guys, we've got Ivan FX taking over the stream. He's going to be taking a look at some of his top trade ideas here in this market right now. By the way, Ivan does coaching. If you're interested in one-on-one coaching, maybe he can share some details on how you can take advantage of that. But maybe the easiest way is to head over to his YouTube channel. Just look up Ivan FX on YouTube. Stay tuned. Learn something with Ivan just after this quick break. If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
Thank you, Nick. It is true that I do try my very best to help traders out there become better. And today, I think I want to start with the mentioned EdgeFinder and talk about carry trades, not as extensive, but what do you look for? I mean, like what is happening? So Aussie Swiss, dollar Swiss, pound Swiss is because of the very low interest rate and the very weak GDP and inflation in said Switzerland. And as well, even more fun is that Aussie yen, dollar yen, pound yen is also in bullish, and you would get swaps for holding those. So that's kind of one side of the reason for why I keep trading the yen, is because there is a swap, there is a carry trade, there is aversion to the bullish side. Now, I am trying my best. I am holding my hands and toes together so that I don't pull the trigger too early on these New Zealand yen trade. I'm like, I want to buy it. But then I saw this morning that, hey, Marco, you sold euro yen. And I'm like, oh, okay, interesting. I got a bunch of DMs. I got 5. I got a bunch of questions like, hey, what's the deal? Marco, what do you think about Marco? Well, like, he sold euro yen. And I'm like, yeah, dude, very great. So I don't know if I'm going to spend a half an hour on or 20 minutes on that, but just a bit of a small reminder that every trader, that's why I always say respect other traders. And even Max, I think that is the most, I think me and Max has the most healthy relationship ever in terms of respecting other people's opinions. Is that, Max would tell me that he shorted whatever, was it euro Aussie, euro pound, euro CAD, sorry. Like some of these, I would never trade that. Euro CAD, it was, what was it, euro Aussie? Like this, for example. Like I would have thought about it, but now it's too late. It's like 1,000 pips too late or what, right? But he sold it. I'm like, cool, great, fantastic. I didn't believe it, but I still have so much respect for other traders being able to pull out information that I don't see, and they can still be successful. And even in a downtrend, right? Even in a downtrend, even though you're right about downtrend, you can be the seller here. I can be the buy here. You can be the seller here. And yes, if you're a seller on Euro Aussie, you would be getting way more profits. But that doesn't mean that I will be less successful. I would just have that move as about 300 pips, and he would have 800. I think that is the beauty and the fun part about trading, is that it doesn't matter your system as long as your system is proven to be working over time and that you're comfortable with, and you don't sit there and stress bullets. And then another comment that I saw today that really kind of had a bit of fun with that in the mentorship group meeting we had an hour ago, is a question about, but where is the source to get really core knowledge, understand about golden rules about trading currencies? And to me, the golden rules and the very own like the grits of everything is, number one, understanding where market is going, understanding the drivers, and understand the fundamentals. And I can say, or I can do for that matter, I can say, okay, short euro Aussie sounds like a great deal. It's about a bearish. Aussie is strong, euro is weak, everything is great, right? Will I be successful trading after 1,000 pips or whatever it is from the previous high? And then I do this many times, and I figure out that most times, like I think it's like 70%, I think it is, I would lose. It's red. So would I do that again? No. I would have to wait for some kind of pullback like this. That would be great. And then another fall. And then I can continue. But this other guy called Maxi, or Maxime, he has been selling for a long time, and he's probably now getting out. And if I'm supposed to start chasing his trade that he took successfully for a long time ago, I am always going to be the one that is always, always, always too late to the party. I'm always going to lose. I'm always going to lose. I'm always going to lose. So, to my defense, if there is a defense, I believe wholeheartedly that that the yen is weak. Well, not only because overnight we had some slow growth, we had 0.1, expected 0.4, previous 0.6 revised down to negative 0.7. And I think, okay, cool, great, that is bearish. Then I saw yesterday. This is a question, Nick. I know you can't answer me, but you can ask me some other time. Do you have bond purchases on EdgeFinder? So I don't need to do this all every time. But I saw yesterday that I think is money bond purchases. We have gone from 3,000 billion to, or 3 trillion to 27 trillion. And I believe that should be a part of the 43 trillion yen that they said they were going to use. But yeah, that is massively bearish for yen. Might be already priced in, but I think that still covers it. And then I believe that Takashi, in opposed to Marco, is going to lead to weakness short term at least. And then I think what we are actually trading is when does and how does Takashi's policy impact yen? It doesn't make it weaker, it doesn't make it stronger. Do we believe that it's going to lead to inflation? Yes or no? Because inflation has been here, but hasn't been no growth with all the spending. So far, spending a lot of money on bonds has not created the environment for raising interest rates, at least not a lot. So there is that. Oh, the man, yoo-hoo! Fresh cut. No, it's just my just longer hair. Thank you. Max says exactly. We can do both. We can both do money. We can both lose. Yeah, especially when you go against me. it's more the last than the first. Hi, Ivan. Could you explain how PC year-over-year affects Japanese yen? It's the only FX pair in all of the currencies that gets a reading in EdgeFinder. I don't understand the connection. Are you talking about a US dollar PC? Oh, sorry, dollar PC or Japan PC? And does it have a PC? I don't know what that half. Do they have? Oh, we can. Yeah, I'll do some Googling in the meantime. Does it have it? Nah, I don't find anything. So maybe. If you're talking about US PC, it's just inflation. You're already in New Zealand yen. Yeah, of course. So the connection between the US PC, if I'm right, no, so PC is just inflation number. It's just another. So okay, so there's three different inflation numbers, right? One inflation is the price at the shelf. Another is price at not price, but paid at checkout, as a receipts, as a what you actually pay for. And then the other one is, and the third one is what the producer paid, or what the producer charges probably. So there's a difference between what you pay at the shelf and what is at the checkout, and what you actually pay at the checkout, right? And they're all trying to measure the same inflation and changes in prices. So this difference between the shelf price and what's paid in checkout is generally like government subsidies, or what do you call it, offers, or personal offers. Did I do it? Yeah, checkout. Yeah. Is it check? No, it's check. I can't do spell check today. Yeah, government subsidies, sale, or personal vouchers. So that would be the difference between them. But I would argue that PCE is more important for Fed. So it's a better a better measure of inflation, or a more accurate measure of inflation, probably what they are going to say. So it doesn't really matter that much as long as you pay attention to all of them. So how did it affect the market? PCE as inflation affects the currency of any kind in Japan, dollar, or anything. It's a direct impact because inflation leads to potential changes in monetary policy. It's not as, yeah, it's almost direct because it also depends on slightly, not as much as, but still labor and GDP and PMIs also measure and also depend, and all the other indicators. But generally, even when you have a bullish inflation, and stronger inflation, higher inflation, you generally have, you also are going to have higher interest rates expectations to come, and interest rates will start to rise. So for me, Nick always says, I'm just going to talk setups. I have talked setups, and I'm still in this. No, sorry. I have made a setup, and I'm still in that setup, and I can't get out of the setup because it hasn't hit a stop loss or a break even yet. So 1750. So I'm just here waiting, like and I didn't know that there was supposed to be presidential day today. So I'm like, market's gonna trend today. No, it isn't. So dollar, what is dollar doing? Is dollar doing anything? Not really. But what's surprising to me is that the low inflation Friday hasn't really kicked the euro into some kind of bullish trend. And that's kind of what I feared, or hoped for, or whatever that word is called in English. So, okay, I'm still in it. I'm still waiting for it. I'm still gobbling my eyes at it. I'm still in this SP500 trade for a long time. No, not long time. For since 2nd of February. I'm just mentioning it. And then we did successfully. Did we successfully trade that one? Yeah, we did successfully trade that one. Let's see if we can find it. I've in trades, dollar yen. We posted that 30th of January. And there we go. Yeah. Did the beginning there, and the entry was 153.70. Okay, cool. And then from something to here, up to 156.6, I think I took the profit at, about 200 and something pips. And then half of there, and then half again at break even here. And now I'm waiting to turn it back around higher again. Now, I'm dollar bullish, remarkably, and dollar bearish, remarkably. And it sounds a bit weird to say that. But for this week, and maybe that's kind of what I want to point out today, is be courageous about your analysis. Be strong and be courageous, and be wrong, and be okay with being wrong. It doesn't matter that you are bullish or bearish. At the end of the day, it doesn't. It's how do you execute said ideas? Do you buy now? Do you wait for a reversal? Do you wait for your setup? Do you wait for something that you have proven that works over time? And at the end of the day, that's what I believe will set you free. Because if you're going to wait for something or someone or or whatever it is, you may wait forever. Okay, so that for me, yeah, it's a bit high. So I need to lower my lot size. Um, this is how my weeks looks like, and for that matter, if it comes true, if we do make higher highs, if the dollar remarkably does go higher, then cool. I have very little faith in it because of the low inflation on Friday. But so far, it still kind of makes sense. And if you decide to short dollar yen here at 153.50, cool, great, great. I wish you the absolute must of luck. And when you come and show me the profits you made out of it, I'll be very happy for you. Do you think buying Aussie yen, dollar, Aussie? Do you think Aussie dollar yen and and US dollar Japanese yen make sense to buy? Yeah, it absolutely does. Now, we are currently seeing. Okay, for Aussie yen, we have, generally speaking, a bullish trend. Fair enough. It is higher and longer. Uh, is it going to continue? Well, I think that comes down to the next Australia CPI number, and that is going to be February 25th. What is it today? 16th. That is in 9 days. So that is absolute. That's gonna be the decision maker if this trend continues or if it kind of pauses or starts to fall. On the flip side of it, it comes down to the yen. Where's yen gonna go? And what I am imagining that is happening currently is that we are trying to make a new high, pull back, and then continue higher. But I do see how absolutely fragile this is. That I feel like we are kind of like mid-air at the moment. But that's where it comes down to: have you done this before? What is your track record? How confident are you? Are you trading? Are you trading blindly? Are you trading with past performance, or are you trading this for the first time? And if you are, then okay, I can't recommend you going on demo because that would be advice. But um, I don't do anything without having and had checked it before. And then the other side of everything that is fun with trading is that it's real market. It's a live real market. It depends. Like maybe this is the one time out of 30 that this one time this one trade out of 10 trades, these three that makes the loss. And then the other ones makes the gain. So it has been very profitable looking into buying Aussie yen. It is bullish. Has positive swaps and is a carry trade. So, and then my yen bearishness my fundamental bias on yen is bearish. So, and I believe that it should lead to even more yen weakness. So, to me, it's a clear cut to the higher side. But of course, the question that me and Marco are answering differently is: when is the potential, if so, when is the potential exit of carry trades going to happen? But in the meantime, and I don't see that happening at the moment, it's 153. It sounds like a good deal to me, or 150 or 148. Does it make reversals around those prices? I am interested. But if we just drop like a ton of bricks for whatever the reasons are, then sure, we can do another 2025. Then I need to wait way longer before we start to rise again. And I definitely see the resistance that's been created at 157.40. But I don't see the reason for why we should go down to 150, 148. To me, what drove the market here is still there, though it might be exhausted, it might be used, it might be not present anymore. I can agree with that. But yeah. So New Zealand yen is another on my list for tomorrow. They are going to have they're going to have their monetary policy meeting on Wednesday, depending on the country that you're in, because it's going to be at, I think, my 2 a.m. So if you are in the continent of America, um, west of Europe, then you're going to have it on Tuesday. That's going to be very interesting to me. New Zealand has, or the RBs that hasn't come out, and they have been very neutral. I mean, we're going to wait, we're going to wait. But the problem with them is that they have persistent, if anything, higher inflation. So I think it's 3.1 or something now. So it's not at 2 anymore. So they have high inflation, so that should be bullish for New Zealand. Is the central bank going to acknowledge it? Is she going to be worried about it, or is she just going to be instant now? So we're not going to do anything about it. But the market has so far disagreed. The market is currently pricing in an interest rate hike this year. So I think it's maybe 1 or 2, 40 basis points. So 1 3/4. So almost 2 rate hikes this year has market pricing already. So that should keep the New Zealand higher, at least for now. And then I believe, hope is probably the word, but I assume that the New Zealand Central Bank is going to acknowledge the higher and improved economics. For me, some interesting CAD this week. Yeah, there is the Canadian CPI inflation number. Again, same situation as dollar yen. We have come down. We have some kind of range. We haven't really made a new higher high yet. We haven't really started trending yet. That could, of course, by all intents and purposes, happen overnight or tomorrow. That doesn't change anything at all. And to me, I think it's a good theory. If inflation comes in stronger on Tuesday, I don't know if it will. Mark is pricing in 2.4. I think for me, Canada at the moment would be more 2.8. Sorry. Yeah, no, 2.4. 2.4, 2.8, depending. Also, if they come out higher, then yeah, that would definitely be bullish for CAD. But maybe maybe my heart is more like, but it's been so weak for so long that I don't really think it might happen. And of course, it's the effects or defects or effects of the of the tariff war that's been happening, and the different deals they have been making. Does it have any impact on the economy, or does it at all? Is the weakness in the Canadian economy so strong that the social inflation also coming down again even more? So to me, well, it is what it is. So for tomorrow, I'm not looking to sell your dollar, but I would hope for it to fall more. With dollar weakness, I would see New Zealand dollar, Australian dollar coming in higher. That would lead to me looking for Aussie yen or a New Zealand yen trade for tomorrow. I don't know if I like current because I now see the price action. I would probably have to upgrade it to a new higher high pullback so I get the second one. Because if not, I need to buy it now. But I don't seem to fancy it. It's a bit aggressive. So new higher high pullback. Euro yen, same situation. Needs a new higher high. So I'm kind of game on Aussie yen, Euro yen, New Zealand yen for tomorrow. And then and then kind of wait. So what I would do is for London Open tomorrow, because I normally when this starts to move at around Asia, I'm asleep. So for tomorrow, I will wake up and I'll make a decision. So now I've mentioned it to you that that's what I'm thinking. Yen bearish on and risk on, and then we will see if it makes sense tomorrow. And oil to me is also bullish. So if that also comes into fruition, though there is negotiations with Iran and the nuclear program in, I think it was Geneva, tomorrow. So that is massive potential, or not at all moving. Um, so yeah. Until tomorrow, you can check out my YouTube channel. You can get in contact with me if you need a 1 hour with me for free to discuss your trading and how you can become a better trader. Because that's what I love to do. I love trading, but I really want to meet people instead. So until next time, I love you. Boom.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, everyone. How's everyone doing today? It is a pretty slow day in markets today. I will say not too much is happening here. We do have a US holiday here, so we do have some markets closed here. But for now, we do still have Forex operating. We have the metals, we have cryptos, all that good stuff there. So awesome. Hope everyone had a fantastic weekend, is ready to go ahead and attack this week ahead. For those that do know, we do have a little bit of inflation data for the US, for Japan. We have FOMC, we have meeting minutes for the US and also for the RBA. So that's going to be awesome to see. And let's go ahead and talk about some current trade setups that I'm looking at. I'll start with the existing ones that I have, and I'll represent it by showing the dollar index first here. So if I go to the daily time frame, dollar index here, we did have this level of support at the 96.5 level that I was watching. We had a little bit of a fake out situation so far, right? This can definitely go ahead and flop and go lower. And in that case, that wouldn't be a fake out. But for now, we did have this 96.5 level hold once, twice. We faked out here, but now we're elevated above here. We did have a somewhat interesting set of news events last week. We had a strong NFP, a better than expected unemployment rate, but we did have CPI, which was cooling. So a little bit of conflicting things there. However, I think it was a net positive for the US. So we are seeing the dollar index approach this 96 or 97 handle now, a little bit higher here, so little catching some support. So what do I think about this? Well, I'm currently long US dollar in the very short term. So I'm kind of targeting this 98 handle here for the dollar index here. So if you go ahead and look at my euro dollar position, it is barely in profit. If anything, it's probably not in profit at the moment here if you go down to the 4 hour. However, I am looking for a quick short position on the euro dollar, trying to catch this 17,500 level. This will go ahead and look like the 98 handle on the dollar index. So that's what I'm looking for. And I'm looking to reposition if we do get to this profit target that I have in mind, because I do think that the Fed is set to cut interest rates. You have that narrative that is very strong and very bearish for the dollar. So I don't want to be overshooting for something like the 1.15. I want to be more of a one-to-one trade idea and then kind of, repivot once we get there. Now, if the fundamentals still look very supportive for the US dollar, then I can always extend this further as we get there, or I can just wait for a re-entry if I'm already out the market there. But for now, this trade is kind of being very slow here. And we do have the FOMC meeting minutes, like I mentioned. We do also have USPC as well. So those two will go ahead and definitely influence the direction for the dollar. We also have GDP as well, too. The other position that I'm in, which is a little bit more risky, I would say, is dollar CAD. I like this position. It's in profit right now too, but barely. And from a technical perspective, we were bouncing off of support here once, twice, and now potentially a third time. A dollar CAD tends to chop around. So if you look back over here, 2022 up until 2024 here, we were kind of playing within this playground. So if I put this rectangle here, this was pretty much the thing here. So essentially what I was playing for was a bounce off of this level of support, but then also that support on the DXY and also some improving fundamentals in the US. As far as for the Canadian dollar, which in currencies we're trading currency pairs, so you always have to look at the other side of the coin. I was actually thinking bearish oil, right? So at the time on this weekly time frame for oil, we were at this 67 handle here, 66 handle for oil, and we've kind of faded off since that. The reason being was a variety of reasons. You do have extra supply of oil and potentially not enough demand, as at least for the analysts say that. Right? The analysts say that. That's kind of from what I've been reading. You also have, which is the more important theme, I think, is the U.S. versus Iran. Right? You had a little bit of a risk premium priced into that, and currently we haven't seen any escalation so far. We haven't seen that, and we see progression from both sides willing to go ahead and resolve the tensions. And if that does happen, then you will probably get a fade of the already priced in risk premium. So at the moment, oil is kind of trading within these two levels here, the 66 handle and the 62 handle there. And if you go to the 4-hour time frame, this is pretty much what it looks like here. So kind of just chopping around. My thought process is if this level holds, which it seems like it is holding, and oil kind of goes ahead and appreciates, then the Canadian dollar will appreciate as well, as is some kind of a correlation. And I'll be wrong, actually. I'll be stopped out of my position. However, if this 62 handle tends to flop and oil continues to tumble lower, if you kind of see some easing headlines there, perhaps that's the catalyst to drive it lower, then my position will do pretty well. So that's kind of my risky position on dollar CAD, but I'm pretty happy with it. I think I got a good risk to reward ratio considering the current technicals. And if I'm wrong, I'm wrong. That's perfectly fine. But I actually like that idea a lot. All right. Holding a losing position. Let's go ahead and look at the comments here. Holding a losing position on gold from 5,000, but it is swing stop loss 49.40. I'll have to go ahead and talk on gold for sure. Interesting. I like USD long a lot, but CAD also looks interesting as well. Yeah, so there's another thing with the Canadian dollar as well. Go to the EdgeFinder here and we'll go ahead and look at the COT data. I think it had the highest, Canadian dollar had the highest net change in the positive direction, 3.56. So showing really good momentum there for Canadian dollar right there in the short term. So that's also something that's at play at the moment. So I think a lot of the trade, the outcome of the trade will be influenced by the upcoming U.S. fundamental data and as well as the tensions in U.S. v. Iran. So basically, this is a bet that things will escalate. And if that's the case, we can go ahead and transition into gold and assets that are very sensitive to the current situation. You will probably see safe havens like gold fade off a little bit, silver as well continuing that downside. You can see that divergence between the two. Silver showing some relative weakness against gold there. So let's go ahead and talk about gold, because I just went ahead before I went on the live stream. For those that are not in the Telegram channel, go ahead and join the Telegram channel. Every day I post 2 chart markups every single day, highlighting the most relevant charts of the day, just so you guys are up to date with the macro fundamental outlook for the day, right? And I promise if you read these markups every single day, you will be so much more knowledgeable and you'll be very well versed in what's going on in the world. So one of the charts was gold, right? So let's go ahead and talk about gold. Also, too, before I go into that, last week, whoever participated in the free week for the EdgeFinder, I hope you had a fantastic experience, and you go ahead and consider getting the EdgeFinder on sale. Not just the EdgeFinder, but I believe other products as well. Most of the products for A1 trading are pretty much on sale. So if you had a fantastic experience with the EdgeFinder, go ahead and get yourself a copy. I promise your trading will change for the better. Let's go ahead and talk about gold here. So gold is flirting pretty much with the 5,000 handle. Eisen, you're in a trade there, so I'll go ahead and address this for you here. And for anyone else that is trading gold or looking to trade gold, let's go ahead and break this down. So at the moment, we are seeing gold just chopping around here, right? Between the 5,100 handle and the 4,700 handle. We did get a somewhat bullish score here on the EdgeFinder, and it has now faded off a little bit since then. But if I go ahead and pull up the data scanner for it, for gold and silver, Hey Joshua, hey Bashi, hope you're doing good. I'm doing fantastic. So looking at gold here, it is a slightly neutral to bullish reading here. So it was at 5 reading before, but now it's 4. However, it seems like the reading is kind of tilting in favor for gold at the moment. And so what do you do at the moment? So right now, gold at 5,000. I'm kind of think of it of 2 ways. I'll go ahead and illustrate it with a path, right? If the momentum is super, super strong and you get a break of this level of what could be resistance at the moment, I will look for some kind of a break and retest and then trade it higher there. The other outcome, if you do get some kind of a tension release in US versus RON, or you get a dollar bid happening there, then it actually be better to go ahead and see if we can get a pullback into maybe the 4,700 level or even 4,400 level, right? Those are the 2 areas that I'm looking to, or the 3 areas that gold looks very, very interesting. Only 3 outcomes. Either you get a break and retest, 4,700 or 4,400. Anything else is off the table. So I'll be playing the patient game. Right now, gold is just looking pretty ugly, looking in between the range. I don't like to see that. I like to see a strong fundamental, theme behind it, which will be the EdgeFinder bullish score and a technical, very obvious technical, read there. So that's the kind of outcome for gold. Silver, I don't know who trades silver. I don't trade silver, but I just wouldn't touch it. Right? It's ugly, relative weakness against the other ones. It'll probably drop like a rock if you do see those tensions ease in U.S. versus Iran. So that's kind of the outcome that I'm playing there. Let's go ahead and see Aussie Swiss. Aussie Swiss, I heard, is a fantastic position. I was looking at the top sales page. Let's see. Eisen said, I was long when I was bullish, and also US-Iran still conflict. Yeah, it's still up in the air, right? Still needs to be resolved. But for now, it's kind of just chopping around pretty ugly. So I really wouldn't touch it. Someone said Aussie Swiss. Let's go ahead and verify that with the top setups page here. Yeah, Aussie Swiss bullish reading 6 score. Actually interesting to see. Let me see. So the most highest scores is 6 read, which is interesting. Eisen said, I want to go long Aussie Swiss, but bad weighting. Yeah, so it's getting a bullish score. If you pull up Aussie Swiss, just off the back of my mind here, before even going into it, you do have that the Swiss basket has been pretty weak. Same thing with the yen, missing most of their data expectations. And the Aussie dollar, right, has elevated inflation. RBA is looking to hike rates. You'll probably see more info as you get the RBA meeting minutes this week, so we can probably approach that better. But Aussie Swiss here, trading higher. I mean, slow grind up here, but nonetheless, an upward trend here. Possibly you can continue higher or you can wait for a pullback. It really depends on your personal style here. This is not an asset I would trade. Strong fundamentals behind it, but also like we're pretty elevated. If you look at right here, like this was a previous resistance point, like we got up here. Same thing. We had a slow grind higher. Once we got to this level, we kind of faded off here a little bit as well. So that definitely is something to consider as well. Bullish reading nonetheless, but depending on your style, if you're kind of going with the flow already, then trade it. Or if you want to wait for a pullback, that's up to you as well. But I wouldn't really touch this chart, to be honest with you. Even James is thinking of going long Aussie Swiss. Yeah, I would have to reference his video and look for it, but it seems like the trend to the upside is there. It's very obvious, but I wouldn't touch it myself. Yeah, subscribe to myself. Thank you guys for that. And also get yourself a copy of the EdgeFinder. Seriously, like if you had a good experience last week testing it out for free, so many good things to go ahead and look at in this terminal here, and it's on sale, so definitely check it out as well. Get the EdgeFinder, get the VIP Discord. You can see the trade signals from Nick, Marco, which is about to come on, Ivan, Chris Pulver's on there as well. Yeah, there you go. You see that in the chat here, and we do have Marco here in the background. What's up, Marco?
Hello.
How are you, man?
Doing pretty well. It's a sleepy Monday. Markets are kind of sleepy as well. Not a lot of movement. How are you? How is your start of the week?
Pretty well. I'm still within my 2 positions that I was kind of talking over here today, but they're really not moving much. But nonetheless, they're at break even, so I can't really complain here. And also, I'm probably early to the move, right? I guess it seems like we're waiting for more data to come out and more clarity. But I'm just in my euro dollar position, man. It's pretty much break even. Dollar CAD as well, slightly in profit there, but just waiting for those to play out. How about you?
Well, I do have my positions on Japan, which is essentially the Nikkei buy, which is doing pretty well, but the markets have slowed down. And I have a Euro Yen short, which is around break even. So we had some news out of Japan. If we go to financial juice, for example, so breaking news, go to Forex, and we scroll a bit lower. This is the only news for today that actually moved the markets.
Yeah.
So Japanese GDP, actual 0.1, forecast 0.4. Annualized GDP, forecast 1.6, actual number 0.2%. So that's kind of a shock to the markets, but it doesn't mean much for me long term because the current policies of the current administration have not yet flowed into the economy. So it's going to take a few weeks, a few months for the policies to flow into the economy. That's why I think this is short-term negative for Japan, but long-term, I think the fundamental story is still untouched. So that's why I'm staying in the positions and just using my initial stop loss levels. So I think this is just, kind of some uncertainty on the day, but longer term, we should still be bullish.
Yeah, slow day nonetheless. I did see that as well, that GDP miss. And I think we will see more for Japan come later in the week. We have like your imports, like your trade data, and you also have inflation as well over there, which I think will really go ahead and move that market. Technically speaking, let's go to USD JPY here. I did a chart markup post here before I got on the stream here. And I was kind of thinking of this as a double bottom potential. What do you think about that? I think if we were to break 152, then you definitely have all this free space here to go. Yeah, I mean, you have this this kind of overnight weekend gap here that played out here. This big one. I mean, this is breaking it down. This is about 120 pip gap here. I think you have so much to the downside, but I think this is the last line of defense for dollar yen. Do you think there's any upside to dollar yen at all, or you think it's going to continue lower?
I think it's the case of sell the rallies. So if we do get a bit of upside, I think selling it could be a good decision. What I know is that the BOJ will defend 159 or 160. They have already kind of made some comments on it. They did a rate check, or they coordinated with the Fed to do a rate check at these levels, which gives us a ceiling. We are kind of close to the ceiling. I mean, not really, but if we do rally a bit more, I don't see that there's going to be a lot of breakthrough power to go a bit higher. So I think it's a case of sell the rallies where the carry trade keeps unwinding. If I check out the bank for the rate forecasts, BOJ is going to hike, or it is actually priced in to hike. Fed still priced in to cut, which gives the carry trade less of an edge. So the profit margins in the carry trade are getting smaller and smaller. And as this keeps on happening, as the rates keep going in opposite ways, I think more and more big funds will start to sell the dollar and buy the yen long term. So that's my opinion on the dollar yen. Would you agree?
I love it. Yeah, I do think that like the potential of a slight bid on the dollar could be very well happening. However, you worded it perfectly there. It's somewhat capped, right? You have this intervention risk once you get into the high 150s there. So I think the better play is either you're going to short it, or you're going to sell any rallies, or the way I'm going to do it is a little bit more conservative, is just wait for some more pullbacks, right? If you do get some kind of a flow off of the dollar yen, then I would just wait for a more steeper level of support somewhere. That I don't know, 140 is kind of far out there, but as we know, we can get there pretty fast. But yeah, I agree with you. Yeah, very short-lived rallies if we do get anything for dollar yen.
Is it a holiday today in the US?
Yes, it's George Washington. It's George Washington's birthday. It's President's Day.
Okay.
I think it's George Washington's birthday or Benjamin Franklin. I don't know, one of the two.
One of those guys.
Yeah.
And the banks are closed?
Yeah, like I think equities markets, like stock markets closed, bond markets closed.
Okay.
But you still have like the Forex is still open and all that stuff worldwide. Yeah.
Yeah, cool. Because you can definitely see like less movement less volatility. I mean, today
Yeah.
it feels like the weekend is still going on. So a pretty slow Monday. Just the Japan news. Nothing else seems to be moving. Even gold. I know we talked a little bit about gold before I came on, but EdgeFinder is pretty close to a bullish reading. Keeps flip-flopping from bullish to bearish, which creates a bit of uncertainty. I would love to get a clearly bullish reading on the EdgeFinder. So right now, if we go to gold, it's neutral because it's a 4. I think 5 is bullish.
Yes.
But if we get 6, 7, or 8, then it might be a bit better for me to take a buy setup. To be honest, one of the problems with gold this week and the next week is there is the Chinese New Year. I think they call it the Lunar New Year or something like that. And China is a huge, there's huge demand for gold going out of China. So if China is offline, if everyone is on holiday, then you're not gonna get such bullish price action. And I did make a post about it in the A1 Discord because I backtested last 10 to 15 years of the lunar cycle. And in the backtesting, you would notice that the performance seems to be negative or break even for these periods most of the time. Yes, some years you had huge gains during the new year, but in most years the performance is not that great because all of the Chinese people are basically on holiday and they take a bit of a break from the massive gold buying. Did you see this as well? Any thoughts on that?
It makes perfect sense. I didn't see it. I mean, I saw it, but I didn't go too much into it. But it makes perfect sense because they are a very big participant in the gold market, right? Especially recently, how they're trying to absorb as much as they possibly can. So that makes perfect sense. And in fact, if that does play out, then you may get a more attractive, just slow grind lower here in gold, right? 47, 4,400, one of the levels that I've been eyeing, that I think most people are eyeing as well, as far as for getting an opportunity to really catch a good swing trade on this. That could definitely play out, and I would love to see that. What about silver? I was mentioning how it's showing some very strong relative weakness compared to gold here, clear divergence, as you see silver kind of hugging the lows and gold trying to creep higher here. Are you trading silver? I know, we've seen the forward-looking returns following a huge decrease from the all-time highs, and it doesn't look too hot. Is there a certain level you have in mind for silver, or are you just going to stay out of it entirely?
As far as silver goes, it is below the 20 EMA, if I'm not mistaken, and doesn't look the best in terms of price action. I can try and bring it up here. Let me see. So yeah, below the 20 EMA, EdgeFinder. Let's do a check on that. Neutral reading on the EdgeFinder, and it's even a -2. So gold is much better in my opinion. At the moment, gold looks better, more bullish. Price action seems healthier. We are above the 20 EMA. Even the EdgeFinder would agree that gold is better, so it gave gold a better reading. And again, I have in the back of my mind the fact that if silver has a rock star year, makes 100% or more in 1 year, usually the next year is actually break even or maybe even negative. And that is an occurrence that happened in the last, 30, 40, 50 years. So it's a fact that silver could underperform this year. That is what I'm afraid about, that a lot of retail investors and investors in general were massively long. They were buying this huge uptrend, and now it's time to pay the price. Now it's time for the big correction. Now it's time for the markets to kind of take a breath and for us to get to some more realistic levels.
Yeah, I agree with that. And Marco, I wanted to ask you this question. This is kind of more of a nuanced question here about the dollar, something that came on the back of my mind here. What do you think about the potential Goldilocks setup in the dollar? You have some improving employment, all that good stuff, but then you also have what looks like to be some declining inflation. This is something I posted on the other day. I think it was Friday, the last post of the chart markups that I did on the Telegram channel and the Discord. And I basically said, we had this weird reaction with the dollar, right? Following NFP, we had a fantastic labor market report. We had strong NFP and a good unemployment decrease there. And you didn't see a usual reaction in the dollar. Then you had CPI come in cooler than expected for the US, which is supposed to be bearish for the dollar. Again, you didn't see the usual reaction that you would see, which would be a declining dollar, or rather a faster declining dollar, which I thought was interesting. And my thought process, and this is just me just thinking, right, the way currencies operate and things like that. But money tends to flow, as we know, into the higher yielding currency. And at the moment, you have a unique setup as far as the timing goes, that you have improving fundamentals in the US and you have, lower inflation. And assuming that we won't get a rate cut until June, July, then the US real yield will be looking significantly more attractive than the others. And if you just look at it here, for the U.S. carry, let's see here, it's a equal surprise index here. When you look at the equal strength
Or the
index, I'm
strength.
sorry,
Okay, yeah.
super strong. It's been increased. You see this triangle change here, 0.30 basis points as far as for the USD real yield here. Slight elevation here if you just look at the dates here. But how do you think that will affect the US dollar? That's why I'm also positioned slightly long USD in the short term here, looking to for two scenarios: either you fade any strength in the US dollar, or over time, as the days progress, the weeks progress, you get some more improving outlook for the US, and then you can just bump up your profit targets higher if that's the case. But do you think that'll play out? What's your thought process on that, as far as this unique situation, as far as the timing for USD Goldilocks situation?
So we did have the NFP last week, but the price action wasn't super bullish. So that's pretty weird, because it was good news, bad price, or flat price, which is not the best sign, if I'm being honest. And then we had the inflation print, which was bearish US dollar, if I'm not mistaken. And the dollar just stayed flat. So that just gives me more uncertainty, if I'm being honest. So my reading on the DXY would be that we just kind of stay in this overall range. We could catch a bit of a bid, maybe go back to the top of the range, but I don't see a huge move out of the range, and I don't see a breakdown from the support. So I don't see us crashing the support lower. And if I understood you right, you believe that we can go maybe a bit higher, even break the range higher, or?
Yeah, I guess I was thinking more of like 100.5 would be the max there. But essentially just the idea that if the calculation of how the real yields are calculated, which is the interest rate minus inflation, and given that received inflation just ticked lower, and rates are still somewhat elevated until you do get that next rate cut, that in this little small window that we have until the summertime, that the real yields in the U.S. will be significantly more attractive than the others.
Interesting.
But yeah, I think you're right. Like when you think of the other factors as well, like you have the Japan, right? You have intervention risk once you get to a certain level. I think that the dollar index does have some upside to it, but it'll be capped. But I think a lot of the audience here, myself included too, like always, we're always looking at the possibilities and risks, right? And given that dollar's at 97 at the moment, I think the big question that a lot of people have is, anyone that's trading and is looking to profit from the market, is DXY up or down, essentially. So I was just trying to see basically how you would feel about that idea of the US having those high real yields. It's a story that can be faded, because there's also other factors that can come into play. If you get a huge risk off environment or something like that can disrupt that. But yeah.
I mean, it's definitely an interesting story. I just think you should be careful what you pair the dollar with. And I want to get your opinion on that. So if you pair it with the yen, for me, that's a troublesome thing to do, because the yen, they're going to hike. Like, it's very likely they're going to hike. And with the new government, with Takaishi, the Bank of Japan may hike even more than initially expected, because she's going to be super dovish. And to counter the dovishness, the Bank of Japan is going to need to be hawkish. So maybe pairing the dollar with the yen might not be the smartest, most efficient thing to do, but do you have a currency that you would pair the dollar with where you're expecting a lot of weakness? Let's say UK, maybe, because I
Yes.
know if I just open up my screen and if I go to the rate probability and we go to the Bank of England, there's a 70% chance of a rate cut on the next meeting. And by the end of 2026, the rate should go down from 3.75 to 3.2%. And as a country, the UK is getting pretty bad numbers. So maybe selling GBP USD could be a nice plan. I know you're selling the euro dollar, right?
Yes.
Are you selling GU as well?
Not yet, because I do have the two positions there.
Okay.
They're both correlated in long dollar direction, but fantastic. I love that you brought that up too, because like I wanted to talk about this too. When you're trading currencies, per like a lot of currencies, and I think I saw a comment somewhere, but like someone requested like essentially can someone explain the different roles that each currency plays? And you say that perfect, right? If I kind of believe that the dollar index will get some kind of a bid here, you have to be careful at which currency pair you pick, right? You obviously want to pick when you're trading currencies the strongest versus the weakest, and you want to see the highest divergence between those two. With dollar yen, you do have that risk of intervention, right? So any pop you get, very, very risky. Same thing with something like the Australian dollar versus the US dollar. You have RBA is fighting elevated inflation. They're looking to tackle that by raising the interest rate. So you see this price action here for the Aussie dollar. So also not the best proxy for doing that. And then you're right. You have, I just look at the price action with pound dollar and euro dollar, right? It looks pretty much identical here. They're showing some relative weakness. If you just compare this chart, right? Take a mental snapshot with this chart, it's kind of weird, right? You're seeing that divergence there. So to answer your question, Marco, I do have some charts in mind. One of them, which is the euro dollar here. Speaking in hindsight, probably pound dollar would have been the better choice of the two, but still somewhat related. The price action looks somewhat the same there, so I'm pretty happy with that choice. The other one would be dollar CAD. Dollar CAD, just because I like the technical level there. One thing that's going against me here is that recent COT buying for the Canadian dollar here. But what we can do is actually look at a more holistic view to see what that picture really looks like here. And after this, I do have to head out, Marco. I know you have
no worries.
So I don't want to take too much of your time here. But if you just look at the Canadian dollar, let's look at the overall holistic view here. Look at that net change, like positive 8%, 5%, 3%.
I missed this.
Yeah, so that's working against me here. But you also have the idea that I'm playing at, which is a good one in my opinion. Is you do have U.S. oil trading a little bit lower there, and Canadian dollar and U.S. oil does have a correlation. And so if we do get some kind of that risk premium get priced out, as you see some kind of a tension release in the US versus Iran, which is basically what I'm betting at, then I do see that you will get some kind of a repricing and all this premium, and that'll also be reflected in this chart here. And so I'm targeting like this level here. I could also target something over here, but I think I'll be playing the safer choice if just going to this recent level of resistance. But yeah, those are the two choices that I'm looking to play the dollar index. I want to stay away from the yen, super risky. Want to stay away from the Aussie dollar just because that monetary policy divergence is pretty wide. So I'll be playing euro dollar and dollar CAD.
I may take your signal on the dollar CAD. Now that you brought up the commitment of traders report, it looks really good.
I might be early to the trade. So the COT data, skewed for the
consecutive.
CAD. Like it's consecutive, but also too when you have, I saw this earlier as I was doing my reading. I think it was the dollar index somewhere. I saw like an article right here, this one, Dow Jones Newswire. But dollar positioning reaches most negative in more than 14 years in this February, the highest since 2012. So we all know how positioning gets once it gets skewed to one direction. Now, as far as when the positioning starts to unwind, we have no idea, right? So I could be dead wrong in this, and this thing starts to flip around once we get to like 1.3200 on dollar CAD. That's definitely a possibility. But something also to be in the back of mind is like when positioning gets very one-sided anything that disrupts the theme, that repricing can be very, very aggressive. So yeah, those are my two pairs here that I'm looking at for long dollar at the moment, and that's subject to change, of course.
Awesome. Love the ideas, and I'm definitely going to look into it. I mean, dollar CAD seems to be at a pretty good level of support, but I know you need to go. So thank you very much, Alan, for this joint segment. I'll see you tomorrow, I think, because we do have more of these joint segments. And
yes.
Yeah, good luck in the markets.
Alrighty, my man. Thank you so much. Bye, everyone.
See you. Goodbye. Time for the solo segment. But before I do the solo segment, I do have a form, jot form. Let's just reset the wheel. So reset the wheel. Form is here. And this form will get posted in the comment section. So basically go to the comment section, go to the form, fill out the form, and you will get a free DNA funded challenge. Okay, now it's gonna be one winner, and it's gonna be, let me check what I have. Let me check my files. Okay, so it's gonna be a 5K one phase account. 5K one phase account. Okay, so go to that form, fill it out. Let me just check if I have everything set up properly. Today is the 16th. Yep. Okay. Seems to be working well. Hello, Sluggy. Welcome to the stream. Max says the COT is against that USD CAD idea. Yeah, but I think the idea of Alan was that the positioning got extremely bullish on basically on the CAD. So now it's time to maybe go back to the middle. So if we bring it up, if we go to the EdgeFinder and we go to COT, we go to data history, we go to Canada, and it may have gotten too extreme, right? I know it has the 50% mark right there, but they have just been buying the CAD like crazy. And the positioning may have gotten a bit stale. So it's counterintuitive because we usually tell you to follow what the institutions are doing, but there can also be the rubber band effect where the positioning is usually, let's say, in the middle. So this is your middle positioning. And then it kind of goes like a rubber band into extremes, and then it goes back to the middle. So right now it may be going into the upper extreme, and then it may crash to the middle, which means dollar catches a bid against the CAD. So yes, it's a bit counterintuitive, but I can understand what Alan was thinking, which is that the institutions might have bought too much CAD, right? So they might have bought too much, and now it's time to sell a bit of CAD. Okay. Max says, interesting. So you fade the COT, but when COT increase but no move, it would be a reversal move to me. Yeah, I mean, you can do all sorts of things. You can bet against it. You can bet with it. You can look at where the institutions are massively crowded on one side. So there's a lot of structuring you can do. The main point is to follow the COT. So the easiest and the main point of the EdgeFinder is to follow the commitment of traders. But again, if you want to do some more complicated structuring and you know that you have an edge because you backtested it, then you can do you can try to assume where are the institutions crowded on and when will this thing go back lower, the blue line, I mean. So the blue line has just been exploding, and it may go back to more of the sort of the 50K level, maybe. We shall see. So very interesting idea on that front. Let me see some more comments. Silver, Aussie Swiss, USD CHF, USD CHF. Has there been any movement? I'm guessing not. Yeah, nothing much. I mean, the markets are a bit slow. Unfortunately, from Friday up until now, nothing much has changed. Let's see. Just reading through the comments. Hi, Marco. Did you shave your beard? Yes, I did. So welcome, Cycling Club. Welcome, Joshua. Looking very Marco-ish today. Yeah, I'm a bit tired, by the way, so I didn't catch a lot of sleep last night. That's why I may have some, what was the name? How do you call it? Like bags under the eyes. Aussie Swiss. Aussie Swiss. Aussie Swiss. Jeff. Wait, Marco had a beard? No, it was just a little beard. Like, I didn't want to shave for a week, so it looked like a small beard. But usually I like to keep it smooth. Aussie Swiss looking great as far as technical analysis goes. EdgeFinder, AUD, CHF. Bullish reading on there. That's fine. That is nice. Let me see. Okay. I like the Aussie. I definitely do. By the way, on this website, the rate probability website, it's absolutely free. I think they have recently added the RBA. I guess they're going to add the RBNZ in the future as well, but they keep adding new central banks. So for RBA, look at the pricing until the end of 2026. Current rate and the December rate is 4.19%. So essentially, they're planning to raise the interest rate, which should be bullish for the Aussie. As far as the Swiss goes, I don't know much about it, so I haven't done a lot of work on the Swiss franc. I would rather buy the Aussie dollar. So I do want to buy the Aussie, but I think buying, or maybe not. Now that I've had the conversation with Alan, now that I know that Alan has flipped to maybe being a short-term dollar bull, and his story definitely makes sense, he made some great points, I may disregard the Aussie dollar and I may look at the Aussie Swiss. If Swiss is weaker than the dollar, then this may be a good play. So good point from Alan. Going to have to do more research, going to have to think about it, and going to have to see how we react at this level, because I know on the Aussie dollar we have just approached a key level of resistance. So key level of resistance right there, which could be problematic. Aussie yen, I know Aussie yen was in the chat. Aussie yen, not something I want to buy. Even though I'm bullish on the Aussie, I'm also bullish on the yen. I am with the whole regime change. I'm with the whole buy yen or buy Japan narrative. So Aussie strong, yen strong. I don't see a clear edge in that sort of a market. So Aussie yen is not something I would look to play. Let me just see what the EdgeFinder is saying on that front. The JPY. Neutral reading. Yeah. So kind of agrees with my thinking. As you know, I'm short Euro yen. So Euro, kind of a weaker economy, kind of a weaker currency at the moment, with alongside the UK. You see GBP, JPY. Could that be something to sell? Yes, another opportunity right here, because we started to get a bit of a breakdown, started to get some yen strength, which looks fine. To quickly run through the watch list, I have the Nikkei, which I'm just trailing my stop loss. I have Euro Yen, which is around break even. Stop loss is still at the original level. Aussie dollar, looking to see what happens. Looking to see the price go to the 20 MA. Gold, I want to buy it. EdgeFinder keeps flip-flopping from bullish to bearish, or from bullish to neutral, so we don't have a clear bullish reading. And another problem that I have from the research I've done, from the reading I've done, is just a sec. Just a second, sorry. Problem I have for gold. We have the Chinese New Year. And during the Chinese New Year, usually the demand for gold goes down because they're a massive buyer. I talked about it at the beginning. That's another reason why I may want to be more patient. So my thinking is, let me wait for the week. Let me wait for this week, okay, and possibly the next week, and let me wait for the EdgeFinder to give a clear bullish reading, clear large score, and then it's gonna be game on, right? So I do still want to buy gold overall. I am still bullish gold on the long term. I think the fundamentals in the world are still bullish. I think there is still a lot of uncertainty. I think capital is going away from stocks, going away from AI, the new capital going into gold. So I want to be in. I'm just waiting out the situation at the moment. Pound Aussie, I want to sell. Pound Aussie, I think, is actually a better play than the Aussie dollar. Yeah. From what I talked with Alan, the USD may be catching a bid. The pound, I don't think so. The pound, I do believe, is going to remain weak. By the way, just a reminder, if you want to participate in the giveaway, if you want to get a free 5K one-phase DNA account, here is the form in the chat. Fill out the form, and you will get entered into the giveaway. So Pound Aussie, I have an alert set. You know my plan. I want to sell it around the 20 MA. If we hit the 20 MA, I'm probably gonna execute the sell position. Let me also see what reading we are getting. Bearish reading, that is fine. That is of course fine. That is great because it's another confluence. So Pound Aussie, very good at this moment. Let's see. Marco technicals and GJ look awesome to the downside. GBP Swiss, Euro Swiss. You guys love the Swiss. It's interesting. I haven't paid a lot of attention to the Swiss during my trading career, you can say, but maybe I should start paying more attention. Thoughts on Aussie Cadarins Decad. Ice phase dip always works with iBags. That's a good recommendation. Marco, do I have to wait 7 days from the last time I filled the giveaway form to enter again? Yeah, I think the form resets every week. So you can enter, if you have entered with one email, then you need to wait for the form to reset to enter with that email again. If you have multiple emails, you can do it that way. But the form does reset once per week, if I'm not mistaken. Rate probability website is a legendary find. Yeah, absolutely free. And this used to cost thousands. This information right here, you used to get it in the Bloomberg terminal. You still get it. And Bloomberg terminal costs $25,000 per year. So, and this is absolutely free. That's the power of the internet. The barrier to entry into trading, into real trading, is getting lower and lower, but the competition is getting higher and higher. Like, it's getting tougher to have an edge, tougher to make a profit, but it's easier to get your hands on good data. So it's kind of a win-lose situation. You know, you win some, you lose some. Let me see. In the future, I want to intern at SMB Capital. That's a great goal to have. I would say the easiest way to become a profitable trader is to get a job at a real prop firm like SMB Capital. They're going to teach you how to be a real trader in, I think, 6 months, maybe a year. In 1 year, you can already be making thousands of dollars per month. So it's the most efficient way. They have the best edge in the world. They have the best traders in the world. And they have the best teaching materials in the world as well. SMB Capital is a scam? No, it's not a scam. I mean, I did a lot of research on the company. The company is definitely not a scam. They're legit. One of the few legit companies in the space, because I do know they make content on YouTube as well. GP Aussie bearish, good idea. Yes. I mean, I'm looking to sell the Pound Aussie. Man, who's running this rate probability website is doing God's work. Yeah. I guess it's just, I don't think he's making any money off of it. I don't see any ads. So I'm not sure how he's making money. I guess it's just, he's just doing it as a project. And there is a contact below, so you can send the guy an email, but it's absolutely amazing. Okay, time for the giveaway. If you haven't filled out the form yet, you have 1 more minute to fill it out, but it is time for the giveaway. If you want to get funded and you don't win the giveaway, by the way, you can use the code A1Live to get 25% off any DNA funded challenge. Okay, A1Live, 25% off any challenge. DNA funded, this is my personal account right here. So I already had a 50K account, past phase 1, past phase 2, blew the funded stage without the payout. Now I have a new account, 25K, 2-phase account, currently up around $670 on this phase 1. Okay, by the way, this challenge is being purely traded using ChatGPT. It's an experiment that I'm doing for my YouTube channel, and it's going good so far. So I highly recommend DNA Funded. You can get a great price. It's being ran by professionals. There's a big broker behind the company. And again, great price with the code A1Live. You get 25% off, so check it out. Let's grab the names. Today is the 16th. Okay. Wheel of names. Spin. And Robert, goodness. Okay, goodness. Oh, congrats on being the winner. After my segment, in around 10 minutes, I will send you an email with the code for the 5K one-phase DNA funded challenge. For those of you that didn't win and want to get funded, A1Live, 25% off. Once again, check it out. Getting back to the charts. So I went through the watch list. Dollar yen, I'm looking to possibly sell those rallies. So if the price rallies, I'm definitely looking to sell it. I think this upper level will get defended. So as Alan mentioned, this is a intervention level and it's most likely to get defended. So I think the path of least resistance is lower for USD JPY with the current narrative that's going on. And you always have to ask, what's the current narrative with or in the world? Current narrative, Japan is attracting money. Money is flowing back into Japan. There's a very dovish government in Japan. They have removed some uncertainty about, let's say, will they be dovish, neutral, or maybe even hawkish? And they had a majority win. So Takaishi's party had a majority win. I think they took 90 or 95% of all the seats in the lower house, which is creates certainty. It creates definitely some certainty for a dovish policy. USD CAD. US stock market today is apparently a US holiday. I'm from Europe, so I don't know anything about US holidays. I just know when there is a US holiday, markets are slow. So there is very little movement in the markets being reflected right now. I mean, it is selling off a little bit, but nothing to be concerned about. What, Dow Jones? Yeah, just flat on the day. DAX, doing nothing. DAX, so boring. Is anyone trading the DAX? If you're trading the DAX, put it in the comment section and tell me what are you doing in this chop. Because I'm looking at this on the daily chart and I'm just seeing very poor performance. The Nikkei looks so much better. Even the S&P looks so much more interesting than the DAX, which is unfortunate because I would love for Europe to catch a bid. I would love to see the DAX fly higher, but it's just not happening. Silver, yeah, we're getting these huge percentage moves, like 2, 3, 4% in one day. But if you look at the chart, it's not much. So silver is down minus 1.5% on the day, but if you look at the size of the candles relative to other candles, it's minimal. Copper, platinum, I don't want to touch. I know I mentioned I was interested in copper, but I kind of changed my mind on that. Google is another thing I was looking to buy. So I was looking at the US stock market and I asked myself, who is the clear winner in the artificial intelligence space at the moment? Google. Google Gemini is the best. They're winning at the moment. They are taking away market share from ChatGPT. So I wanted to buy Google because also the price action looked amazing. See how the price action respected that 20 MA? It looked absolutely amazing. But now this is no longer a good opportunity for me to get in. Starting to look pretty bearish, starting to sell off with a lot of force. So I don't want to be in this market. Google, I'm going to avoid. Crypto, doing nothing. Still crypto winter. I haven't changed my mind. I still think there's a lack of narrative. And the most powerful thing in the markets is if you have a good narrative. If the whole internet is brewing about buying or selling something, usually you're going to see movement. Bitcoin has kind of lost its narrative lately. It's no longer this cool thing in the background that is used by people in the shadows. Now, a lot of institutions actually own some Bitcoin, and Bitcoin is trying to find the next use case. I know you can use it for transactions, and it's okay for that in some cases if you're sending money from one point in the world to a whole different country. Let's say if you're sending money from the US into, I don't know, Germany, you can use crypto. It's better than bank transfers. But all of the other use cases seem to have ceased existing. Like you had, I don't know, crypto in gaming, you had those NFTs, you had blockchain this, blockchain that, crypto this, crypto that. That kind of died down. Will it happen again? For sure it's going to happen again. I'm just being patient at the moment because I think the price can go lower. And then I think eventually, yes, we do go to all-time highs. That would be my forecast. So my forecast is if we have corrected right now, the current correction is around 47%. I think we can go to minus 70%, minus 80%, and then to hit, let's say, 25, 30K. And then I think we can easily go to all-time highs. Once we get some new narratives, once we get more hype, and once the crypto world wakes up again. That's how it worked in the past, at least. You had a huge correction, 70, 80, 90%, and then you had all-time highs. NQ slow, but gave me the cleanest scalp in weeks. Well, if it worked for you, then awesome. I'm long DAX on an account. Interesting. DAX, very boring. Yes. Paying heavy swaps. Yes, as well. Nikkei looks so much better to sell. Joking, I know you're long. I'm scalping DAX, 5-minute frame, buying and selling, nothing more to do. On DAX, I got into 4,518, nearly got my SL hit. I don't suggest buying Google now. Look for next earnings, as probably they will explain CapEx use unless it drops to 250 or 200. That could be a good thing to do. Wait for earnings. I would also wait for the price action to confirm good earnings. If we can go back above that 20 MA, maybe if NASDAQ wakes up again, which means the whole industry will wake up. NASDAQ, unless we can hit all-time highs, I'm pretty bearish at the moment. We may have done too much. We may have gotten overextended with the whole artificial intelligence story. So I'm not touching the DAX at the moment. I'm being patient on it. Bought Google in 23, and I'm still in that trade by trailing stops on the weekly chart. That is awesome. Congrats. Walmart, NVIDIA. Okay, that's going to be the last thing. Last thing for today is going to be NVIDIA. Maybe you're looking at the lower time frames. Personally, I'm looking at the daily. I'm seeing this being flat, super flat. I'm seeing the hype die down in artificial intelligence. I'm seeing companies switch from buybacks to massive capex, which should be bearish for their stock price. or not so bullish as it used to be, because less buybacks, less appreciation in the stock price. Price action here looks bad, just flat, in my opinion, on the daily charts. So I don't personally see a massive opportunity on Nvidia at the moment. That is about it. Thank you very much for watching. If you want to participate in more giveaways, you can find my schedule in the A1 live stream schedule. I'm streaming every single day of the working week. Tomorrow I'm on at 10:15. Again, a joint segment with Alan, which I really enjoy. It's really awesome to speak to Alan. The winner of the giveaway, I will send you an email in 5 minutes with the code. For the rest of you, good luck in the markets, and I will see you tomorrow. Goodbye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.